Hey guys, John Henry here, taking a look at the market psychology side of crude oil. Now today, if you were a crude oil trader, you know exactly what it means to feel pretty tired, right? Not a whole lot going on today, relatively sleepy morning, and we're not getting those big runs that we're used to seeing the past couple days on crude. Now, yesterday we ended with a nice little bear channel working its way lower to kind of kick the end of the day off, and that really just started breaking, right? We opened today all the way up here. That's going to be seen as a breakout move. Picture this is just one big bull candle, right? That's the overnight session. And then all of a sudden we're all the way up here. That's a very obvious breakout move that the buyers are going to try to either defend or the sellers are going to fade right back down to fill that gap area where we closed yesterday down at 72. In this case, we opened up very first candle of the morning very strong. Now there is a lot of wick on the top, but you'll notice there is no wick at the bottom. And that means that as soon as we opened, boom, the buyers came in and they started snatching that thing up like crazy. The big problem for the buyers though, absolutely no continuation. We went from this big old nice bull bar into an inside bar, and they tried breaking out. Now, this is where the interesting part comes in, because if we know that buyers have been buying ever since the market opened up, if it comes back to that level, anybody who missed that entry point is very likely going to jump right back on board so they can get in with the move as well. So that is a beautiful place to jump on board and ride that move back up to the top of the range at that point in time. So beautiful little pop higher to the range there. You could even argue to sell this one, right? Buy low, sell high. That's at the range highs and we see failure. You could easily sell that one back down. We come back down to the lows again. Guess who is going to step back up to the plate again and see defense? You guessed it. The buyers are going to come right back in and buy that level like candy. Remember, they have massive defense stacked up on that area, especially in this context. We know that the buyers want this low. They're not very likely going to allow a breakdown. Also put into context the look of the bear candles versus the bull candles. Look how strong these bull candles are, right? As soon as they open, they're bought right back up. Very little wick on the bottom here. What about the sell candles? Lots of wick on both sides, very extended, no follow through. So we can see that the sellers are trying, they're just not gaining any ground. So buying this low down here makes a lot of sense, knowing that, hey, we know they're defending that area. Keep buying that level until either you're proven wrong or we just don't come back to that level and we break higher. In this case, this is the last chance that you really had to buy that level before a big burst higher. Now, I do have a sell up here, and that's primarily because at this point in time, now we started looking like we may be forming somewhat of a megaphone pattern here, and that was at the highs of that megaphone. We also know that a lot of folks are going to sell this move, assuming that, hey, it's a range day, right? Buy low, sell high. We're probably not going to hold this breakout. There's a ton of wick on top here, and we form a strong bear candle back down. There are going to be a lot of sellers that pile into that move, looking at least for the EMA, if not back down to the lows. Now, this is where it gets interesting, because look at this move up compared to the rest of the morning. Complete shift in sentiment. All of a sudden, we go from a range to a massive breakout move. Very likely, buyers are going to begin picking up on this and want to buy the pullback so they can get that move going back up again. The thing that makes it even better is there are going to be sellers in the move that are stubborn and are looking for their targets at the lows, and if they don't get it, they're going to be shoved out of the market for a stop run. So we have sellers that are looking in this move at least back to the moving average. Nice little move lower there. But as soon as we start seeing that support coming back in, we're right back one tick away from that same support level that we have seen all morning. And that is not a big, that's a huge neon sign saying, buy me, buy me, buy me. Because think about all the people who missed it here. They missed the initial opening. Maybe they missed it through here. Now it finally gives them a chance. It comes one tick from their entry, and then they don't get filled. Right? We've all been there before. What do you want to do? Well, you want to just slap the buy button and just get into the market, right? And that's exactly what they did. As soon as a bull candle turned up, they said, you know what? I just want to get into the move. They buy it, and it forces the market back up, and you have this runaway situation because everybody began buying. The sellers included. The sellers that were short in here knew that they were wrong if it triggered above this, and they exited. The ones that held on, the stubborn ones that were looking for those big targets down here, well, you'll notice what happened when we hit them. Big old bull candle breakout. That is a stop run, my friends, and that's why you don't get stubborn in this industry, because the market will come and find you and it will stop you out. So beautiful plays back and forth here on crude oil this morning on an otherwise range-bound day, turning into a breakout bull type day with heavy buying pressure to the upside for now. So that's going to do it for this one. Hopefully you found it interesting. Hopefully you found it useful and you learned something, and we'll see you next time.